Hey folks, Dan Frio here, the rate update. Today is September 30th, 2021. I'm going to Florida. What does that mean for rates? If you're a follower, you understand what I'm saying. But if you're not a follower, I actually have some good news today. Rates are actually stabilizing and getting a little bit better. And then I got some news and what's pushing the market right now. So don't go away. We'll be right back. First off, I want to see what's moving the market. Well, the unemployment numbers are. So let's listen to Rick Santelli, and I'll be right back. Take it away, Rick.
Rick Santelli is standing by patiently at the CME in Chicago with some breaking economic data. What do you got, Rick?
Good morning, Joe. Yes, we're expecting around 330,000 on initial claims. That would take it below that 351,000. Still wouldn't change. 312,000 is the current low, but it went the other way. 362,000, so that's up 11,000, but I'm sure the revisions will trickle in for last week. And if you look at continuing claims, moved a bit higher as well, 2.802 million, so 2,802,000. The low water mark there, which is the good way to proceed, is 2,715,000 from the first week of the month. So we see that. Now, let's look at what's going on with our last trip around the block on second quarter GDP. It actually gets upgraded from 6.6 to 6.7. The consumption numbers, wow, up to 12%, so they even moved higher. What stayed the same was the price index. The price index is up 6.1%. That remains at a 40-year high going back to 1981. And the core PCE, quarter over quarter, also remains at up 6.1. Don't get too nervous, though. That's not a 40-year high. That's a 38-year high going back to 1983. And if we look at the following, and I think this is really important, quickly, a 2-year note up 4 basis points on the quarter, a 5-year note up 12 basis points on the quarter, a 10-year note up 6 basis points on the quarter. Here's a good one. 30-year bonds unchanged on the quarter at 208. The dollar index up over 2% on the quarter. Bond yields virtually unchanged, but this makes sense. We've all been saying that. Bond yields and 10-year note yields anywhere from a 3-month to 3.5-month highs, so it dovetails right back. And I guess the point there is, everything I read today, Joe, bonds, this is just a technical move, nothing fundamental. Yeah, give me a break. Rates are too low, inflation is too high, and policies are too stimulative. A, B, C. What does that equal? That equals a real move. That's what it equals. Back.
Oh, it looks like he's a little salty today when he's starting to hit back on inflation and spending of government money and too low interest rates and so forth. But kudos, Rick. But let's get off to what's going on in the market today and what's moving the market. All right, so that's our biggest focus for today. Is right here. You see Senate bill passes government funding bill to push this over to the House to see if they'll stop the government from shutting down. Are we hugely concerned about this? As the markets and the media make it seem? Not really. I'm old enough now that I've seen this numerous times. So what usually happens is they'll shut down the government in its worst case scenario, and that'll create fear in the markets. And then they'll work on things for a week or 2 or 3. Worst case scenario, remember, it might be a month, 2 at the most. And then what happens is they pass a bill. Everybody's like, hey, great, great, great. Everybody goes back to work. They get their retro pay, and we're back to square one again. And all that happened was they kicked the can down the road. And the politicians, it's basically just a political move to make each person look as peachy as they can. And that's their whole job, just getting reelected. Okay, so that's that part of the equation. So am I hugely worried about that in the long term? No. The next piece of this puzzle, the weekly jobless claims. Okay, so let's break it down a little bit on what Rick was talking about, but I do want to focus on a couple areas. So this is the numbers right here, but let's look on how far we've come. Okay, with the enhanced unemployment benefits coming to a close, the total of those enrolled under the program fell to 11.2 million, a drop of $850,000 or 856,000. A year ago, there was 26.6 million receiving benefits under the program. Okay, so we're a far cry from there. One of the things that boosted these numbers that just came out, California saw a 24,000 increase, according to the numbers. Virginia saw 12,000 increase because of the hurricane. So between the Delta variant, some weather-related things and so forth, we might have saw a decent number in the jobs report, and it's going to start to dissipate over time. And what we're going to watch here now is homeowners are getting the wrong idea from today's mortgage rates. So again, you follow the channel to figure out where mortgage rates are going, look at those numbers. How's the real estate market? Hey, what's a good mortgage for me and so forth. So I'm trying to provide you all the details behind the scenes so you get the real news, not mainstream media news. Okay. So let's look at mortgage rates right now and what's going on in maybe some of the deceptions or things behind the scene there. While the decline in the purchase business, we're seeing a decline in the purchase business because there's no homes out there really, could explain the sky-high home prices and the low supply of properties for sale. The drop of the refinance applications is more puzzling. That's what they're talking about. More puzzling to people looking to refinance. People are still sitting on the fence with higher rates than they are now, wanting this spectacular rate. Okay, so I did a video, and I'll get back to this in a second. I did a video about a month or two ago, or no, actually a comment on my YouTube channel said, guys, what rate's lower? 5 or 2. People thought it was a trick. It's not a trick. We have people calling that they have 5, 6, 7% interest rates. They're still out there, and they're waiting for 2.99. Okay, well, if you can get 3.25 and you're at 6, isn't it still better if you're not paying a ton of fees? Many times you can get this done with minimal fees. So that's what I want to show you guys in this equation is just look into it. If you're sitting there and you want to, get that lowest rate ever, you missed it. But instead of sticking your head in the sand, let's look at the numbers and see if it makes sense. Okay, so that's one of the things I want to throw out there. Millions of homeowners can still save thousands of dollars a year by refinancing despite the increased rates. But I bet you probably didn't know that rates now are still lower than where we are before the pandemic started. Okay, so that's another part of that equation. And then the last thing is guys, I'm trying to educate you guys to make you better homeowners, better buyers, better financial stewards of your money. Look at this section here. One of the biggest detriments or mistakes that people make, and there's the headline, 10 common mistakes people make when getting a mortgage. I'm going to go down to the section here because a lot of that other stuff is just common sense. Shopping around. You can shop too much. 1, it can get deceiving. 2, everybody has to run your credit. And you can have a few credit pulls without it really affecting your credit scores. But as you call more and more and more people, it is going to start deteriorating your credit scores. And the one big part of your mortgage rate is your credit scores. Okay. So that's an area to watch out for there. But the other thing is, and I brought this up the other day, when people say, hey, I'm getting 1.99, don't fall for deceptive marketing practices. Too often I lose out on to other companies because what they're offering you is too good to be true. It's that comment I said, somebody comes to me and they say, hey, gas down the street's $1. I'm like, can't be. But again, if you pull over the layers of what that consists of, you have to buy 5 cases of beer, 2 pizzas, fill up your car, do a car wash, and run around the building 5 times. So be very careful. That's why I post Black Knight's rates every day to inform you guys, kind of where's the averages. If the average is 3 and you're getting 2.25, there's probably something to it. Please look into it. That's all I ask. You guys have been huge responders to my requests. Send us your loan estimates. Let us review it and get back with you guys. If you're one of the ones that sent it to me and I said, hey, go with the other lender. They beat me. God bless you. Sometimes I get beat. If you're one of those that reached out to me and I said that, please put a description or a comment down below so people don't think I'm just pushing and saying, oh, I do this and do that. I'm going to do what's in the best interest of you. I'm not going to take you down a bad road that I know you could have done better. I try my best to help you guys, But if you're getting something better than I can offer, God bless you, take it. That's what we're here for. We're a community to educate each other and to help support each other. Okay, so now that being said, let's see what mortgage rates are doing today based on a lot of this stuff that's coming in. And let me give you my perspective of where I think we're going to be in the next couple of days or weeks. All right, so what's happening to the MBS market right now? Why do I show this? Well, those that watch me every day, you get it. But a lot of people don't get it. You know, you still ask loan officers that have been in this business for 10 years, what do they follow? And they'll tell you the 10-year Treasury. Don't ask me why. Don't know. It has somewhat of a correlation, but it's not the piece of the puzzle that we're looking at. We look at mortgage-backed securities. Why? This is the biggest component of the function or the creation of your mortgage rate. Okay, this is what's happening to the price of the bond. So as the price goes up, what's happening to your mortgage rate? It'll go up as well. Gotcha again. It'll go down. It has an inverse relationship. So if the price of the bond is going up, your mortgage rate is actually coming down. So we love when people are paying more for the bond. All right. But you can see through this chart, this is a quarterly chart, we got crushed right here. Okay. There's a lot of stuff going on right now that's just not normal. All right. And what I mean by that is, you know, we have issues in the Middle East. We have a Delta variant. We're still combating the COVID virus. We have now possibly a government shutdown. We have a stock market that's all over the map. We have inflation that's running really hot that really nobody knows where it's going to go. There's some people are assuming it's going to skyrocket and continue to skyrocket. Others thinks it'll dissipate. We don't know. Okay, we don't have a crystal ball. If I did, I wouldn't be doing this. I'd be a billionaire trading on Wall Street that I've already been out of the game. But that's basically what I'm showing you, the patterns and all this stuff behind the scenes and giving you my educated guess since I've been doing this for I'm coming up on 34 years of doing this. Okay, so I'm not trying to guide you down the wrong road. All right, so that's where we're at right now. What's the economic calendar for today? Well, this is going to start showing you these numbers, but the GDP came in today and it was good. GDP was higher than expected. That's the gross domestic production of the U.S. Okay, so that's good. Initial jobless claims increased higher than we anticipated, and even higher than last month that nobody anticipated that as well. That's the initial jobless claims. Continued jobless claims, they're up, but they're basically, they came in line and they're lower than we were previously. That's the continued claims, okay? So remember that. Continued claims reduced, okay? And they're probably, or they should continue to reduce month after month or week after week because of the excess stimulus package that was being paid out. Now it's gone and it's going to force people back to work. Okay, so that's that part of it. So that's what we're going to watch for. Federal Chairman Powell spoke this morning. It was nothing to rattle the market, so I'm okay there. Tomorrow we're going to see personal consumption and some other things. This shouldn't really play any role in what happens in tomorrow's market. Okay, so that's that. What's happening today intraday? We have a nice rally up. Okay, so that's what's going on right now in the market. I'm doing my video a little early today because I'm catching a flight at 4 o'clock, so I'm getting out of here shortly. I'll be at your beck and call. So if you're out there and you're looking to buy, you're looking to build, you're looking to refinance, you're looking to cash out, doesn't make sense to do any of this. You're in forbearance and you're like, I don't know what to do. Guys, please reach out to us. That's all I can ask you. If you're in the mortgage process right now and are applied, you have a loan estimate, you'll know what I mean by that. If you have one, please send it to me. My email is dfrio, so Dan, D for D, Frio, F-R-I-O, at preferredrate.com. It's also down below. I'd love to go over that loan estimate with you. I got in 5 today, and 2 of the people I called back, and I couldn't beat it. And they were like, Dan, that's why we call you. That's why we watch it. We like your honesty. So that's what I tried to do. So how to find out more about me and my team? Oh, awesome. Just go to therateupdate.com. Here is our new fancy website. It's got not as many tools as a lot of places, but it's got what you need. Mortgage calculators, all kind of things to see if it makes sense to you. But what I'd like to do is I love talking to clients. So does the rest of my team. So give us a call at 844-775-LOAN so we can discuss your scenario, okay? if you just say, hey, I just want to apply because I know you can help me and I trust what you're doing, click the apply now button. It'll go right to me. I'll review it within an hour of you probably completing your application. I'll be on the phone, or one of my guys will be on the phone with you, going over any questions that you have. You should have questions. The next thing, if it's the evenings, or you're just like, I can't talk right now, but I'd like to do something, click the schedule a meeting button. You hit it, you pick the day and time, the times that we have available, and then we'll reach out to you either by phone or by Zoom. I love doing Zoom because you can see, we can meet, you can meet me, I can meet you, and we can go over any paperwork that you have. So that is it for today, guys. I will be posting tomorrow. I will be in sunny Florida, and I'll try my best to post down there. It might be a little sketchy of a video because I won't have all of this at my disposal, but I'll keep you guys abreast on what's going on in the markets. So thanks a lot, guys, for watching. Please don't forget to give me a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. I will see you tomorrow. God bless.